Hi, today I'm going to explain to you one of the market structures and how to trade about when such a structure appears on our price charts. So, this particular market structure appears specifically after a long move in price in a particular stock or a traded instrument. So, for example, right before you, what I've drawn is a stock that had been in a consistent uptrend. Let's assume that there was a good uptrend and price was really moving up in a nice uptrend. Then price starts to halt, and then it retraces back uh, quite nicely. Again moves up to that upper part, and again comes back. So essentially, what happened is that price is now stuck within a range which has a ceiling and a floor. So, in terms of classical technical analysis, we would tend to call these as resistance areas and the below one as support areas. And if you are one of those who follow Wyckoff theory, then you would know that these are phases in the market which are either accumulation or reaccumulation or distribution or redistribution. So essentially what happened is that price was in a good up move, and then there was some kind of a sideways movement happening, and price got stuck between the upper and lower price ranges, and essentially price is moving up and then moving down. So one way to trade this is that, for example, if this is what is you're witnessing in a daily time frame, you can go down to a lower time frame like a 10-15 minute time frame, and essentially you can trade along with the support and resistance traders, but uh, you must have noticed that we don't really trade support and resistances in our price action method, but we essentially trade zones called demand zones and supply zones. So you can actually look for good supply zones in the upper part of the range, and you can look for good demand zones at lower part of the range, and you can trade them. So that is one way, but this is not the way that I usually trade these kind of ranges from my personal experience. So what I have observed is that after price gets stuck in this kind of a range, uh, like I said, it forms a strong support and a strong resistance in the upper and the lower part of the price range. So, as per the traditional technical analysts, for them, what they normally do is that when they see a good support and resistance forming, they would usually start selling when price approaches towards the resistance area. So they might start, putting their sell orders here, and what they often tend to do is that they will place their stop loss orders right above this resistance area. So this is what they are taught, that you sell at a resistance area and keep your stop loss above the resistance area, right? And when price approaches towards the support area, what they will tend to do is they will start putting their buy orders somewhere around here near the support area, and they will place their stop loss orders somewhat a little bit below the support price range, or the support price level, and they will have to do that again and again until the range breaks. So what happens because of this kind of trading behavior among the retail population is that For institutions, it creates a cluster of stop loss orders. Over here, there will be a cluster of buy stop loss orders in this upper part, and there will be a cluster of sell stop loss orders below the support price range, right? And as we know that institutions are always hungry to get their fills, and a massive set of stop loss orders, a cluster of them is really inviting for them. So often you will see that these ranges will have small skirmishes, and price will often tend to break them temporarily, come down, and take out all these stop loss orders, and then again move back into the range. So by virtue of this phenomena, what I have noticed is that when price breaks one of the two sides, it will often come to a drop-based rally or a rally-based rally. If it's breaching the support area, let's say we have a good, this is a good drop-based rally sitting right here. Okay. So what will price often tend to do is that it will breach the support area, eat all the stop loss orders here because there might be a huge cluster of them over here, briefly come back here with the spike with this demand zone, and then shoot up back into the range, or might even go break this and go up all the way and start a new bull run in a new phase. And from a vice versa perspective, if let's say this is again it's a redistribution phase, let's say, and price is ranging after a good uptrend, but there was history on the left, and let's say there was a good supply zone sitting right above this. So this resistance area, it's somewhere around here. Okay. So what price would often tend to do is that it will break the resistance, eat the stop loss orders of all the support the resistance traders, and then come back to the supply zone and then drop back. So trading at these areas are really high probability from my personal experience. So if you have noticed a nice price range which is really inviting towards the demand, these support resistance traders, and if you have a good nice demand zone right below that range, or a good supply zone right above that range which is fresh, then instead of trading along with the support and resistance traders within the range or at the expense of range, you should trade these outside ones, which is beyond the range. So to make it more clear, let me show you an example of what I mean of recent price behavior, of this kind of price behavior. So if you would have noticed Kotak Bank on the daily chart, it was in a nice uptrend since the beginning of 2019, and much before that as well, since October 2018. It was in a nice rally phase, moving up. Then towards the mid of the month of May, it went up till here, then came back till here, again went up there, again came down here. So it basically exhibited a ranged behavior, from the mid of May, June, July, August, for 3.5 months. So essentially, it was ranging. If I draw this horizontal line here, right, and another one here. So essentially, these were the support and resistance lines, and this was the range within which price was moving up and down after a nice rally. So you can see that often there were small skirmishes. These skirmishes happen because of the support resistance traders, like as I said. And if you noticed, like I said, a good demand zone sitting right below the range. They will give you often lovely trades. So price finally broke down, and it took out all the sell stop loss orders from the retail traders, and it came down to that nearest demand zone, just beneath the support level, and then just from there that it started moving up, right? So it basically faked down, or it was a fake breakdown, eating all the stop loss orders of the retail clients within the markets, and then it decided to move up in the opposite side of the break. So these trades are very profitable in nature. You will see them happening across time frames, and I really encourage you to do more research on this and spend more screen time and observe this kind of phenomena, uh, which is essentially used to trap retail traders. So one is this example. I hope this example is clear to you. And let me show you one more example. I think this was an ACC that I saw. Yes, so again, so essentially, this is not like that classic, range after a nice trend, but there was a range established. If you watch this area of the price chart, price was essentially ranging between two zones, so to say. The lower one was somewhere around here. See? Yeah, somewhere around here. You can see this repeated bounces from here, and the upper one was somewhere around here, right? This is not that well-defined zone, but if you watch this area, still somewhat. So once this kind of price action happens, this becomes a very strong support from the retail support resistance traders perspective, and what they tend to do is to start buying, right, and placing stop losses below. So as PA price action traders, what I said, observe for zones which are below this, right below this support area. So here is the zone, the nearest zone that I can spot here. It was very clear. It's a good one, right? Because see, a rally, a single base candle, and then a nice rally, and price really moved up. So there was a lot of demand supply or order flow imbalance out here. And what happened is that price broke this support which was created first, and then it came back to true demand, very close to it. It shot up quite a bit back into the range, and then again it comes back here, and then it rallies from there, right? And this was the upper part of the range on the resistance side, with a few skirmishes out here, you can see over here. But essentially, right above this resistance area, there was a good supply sitting out here. With good drop candles. And once price broke down from the range, went in this nice demand, gave a huge move up. You can see that it goes to the other side. Since there was price action left towards the left of the range, in Kotak Bank case it wasn't there because that was almost lifetime high back then. But in this case it was not lifetime high, so there was prices above on the left, and this was a fresh supply sitting right above this strong resistance area. Price went back there and then dropped. So also there were other reasons for this particular zone to work. This also falls in the parlance of Quasimodos. That's another advanced topic concept which I will share. But for now, these two were basically designed to work in concert. So there were this is trapping of support resistance traders, and then creation of this QM level, and price fell from there, right? And see how this demand was basically a true demand, how the order flow is getting unleashed again and again from that particular price range. So this is what they do actually. They before, you know, it's very I don't know what to say, but this is what often I notice is that once the true demand and supplies get created, they would often create this sort of technical education based price structures like support and resistances, which will be which will be very much inviting towards those traders to place their orders and their stop losses. And these stop losses would often be used to fill their own orders in the opposite direction. There will be many such instances I can show you where this kind of phenomena happens over and over again, and it's really sad that a lot of retail technical traders who trade the classical patterns are often trapped. But that's the reality of the markets, and the more we become aware of it, we can basically save ourselves from the traps, and we can in fact go along with the institutions at times to have nice risk reward trades. So these are two examples. I hope this concept is clear for now. I will be again placing more examples before you if this isn't more clear, and I'm sure I'll be able to put more examples in future to make this concept even more clear. For now, if you don't understand anything, please rewind the video and watch them again. I'm sure you will pick up more fine points every time you watch them. So here's the summary towards the end I'm going to share with you. So once price starts ranging, it creates a support and a resistance areas. And what you need to observe is good demand and supply zones, which are fresh and which are really nice looking, right above and below these ranges. And you can trade in those particular zones. But you have to be patient because sometimes to have more retail stop losses, institutions would often create these ranges for a longer time so that for them the resistance and the support becomes even stronger, so that more and more retail traders start putting their orders there. So here it is. I hope this is clear. And if you have any questions, please you can go ahead and ask them in the comments, and I'll try to answer them. That's all for now. I know that this is a bit different concept, and it might seem a bit complicated as well for a lot of new traders and people who are learning this style of price action. But if you find this a bit complex, then you can ignore this for the time being. But in future, when you are confident about trading with this kind of price action, you should come back and take a look at this video once again. That is my recommendation to you. So that's it for now. Thanks for watching, and see you soon in the next video.